In this video, we are going to be doing some in-depth analysis over on Netflix ticker NFLX. Now, they do have their earnings coming out after hours today. That's the main reason we're doing this analysis, so we will go through the key levels to be paying attention to. So for this, we will be using the standard deviation channels. Again, this is a technical indicator. Considering earnings is a fundamental that is always going to outweigh the technicals. So it's really waiting for that release, at least waiting for kind of 5, maybe 10 minutes until after the release. Then we can go back to looking at these technical levels. But on the actual release, I would be avoiding any technical levels, whether that's these ones or any other ones you have. If it's pure technical, again, is likely to break or just not be respected during a fundamental release. So what are these key levels that I'm paying attention to? So from a support side, and I think these are kind of more likely because they're a lot closer to where current price is, it's going to be around 311 to around 395. Now, this is our first deviation, both the 6-month and the 1 year. Considering right now we're around $332, we only need about a 6% pullback to hit that 311, which again on earnings, especially for Netflix, which has been moving about 20% on recent ones, that's definitely likely. And then we're also looking at around a 12% pullback for the 295. So these would be kind of the two key levels I'd be paying attention to. And if we did get an extreme move, it would be looking at 266, which is about a 20% pullback, which again is kind of more in line with the recent moves we've had on Netflix. But again, we said we're not trading the initial release. So if we snap down, 15% in 5 minutes, it's not going to matter if we didn't enter at this 311, because again, we're not going to be entering there. So it's really just waiting for that release to come out. Once it starts to slow down, once we start to see, the 1 minutes consolidating, or at least just being a lot less volatile, we send the volume start to slow down a bit. Then again, these technicals will most likely be respected. So if we drop down to 285, then I'd be watching for really the 295. If we come back to retest it as a resistance and we start to sell off, then again, I'm watching 266. If instead that we break above 295, then all I am is being patient, waiting for the break above, come back to test it as a support, and if that support holds, then potentially looking to play it long for more of a bounce. But again, do be paying attention to the earnings released. Is it justified or is it an overreaction? That's going to be the key thing. Recently, we have been seeing a lot of overreaction on earnings, and in those, and there's definitely the next day bounces. But if it's somewhat justified, then again, maybe we don't want to be taking that long, at least right away, maybe waiting for the next day to open and seeing how it opens. Then coming into around 355 to around 357, this is our statistical mean between the 6-month and the 1 year. So this is considered fair value on a stock. Fair value is not something I personally look to trade. It's just what I look to trade to. So we used as a target, not as an entry. So if we were along, say, at the 310, that would be my final target, but I wouldn't look to open a position off of this level. So yeah, 311, that support, that would be the final target. Again, obviously locking in profits along the way, but that would be my absolute final target. Then if we did break to the upside, I'm paying attention to basically that $400 psychological level, kind of pairs with that 402 first deviation. And if we break that, we're looking at around 413 as that other first resistance, first deviation. So again, with the earnings, obviously it's a gamble which way it will go. So that's why we kind of got these key levels at both sides. If for any reason the earnings released isn't that volatile, we don't break down, well, we don't break to either of these levels, and again, to me that is a no trade. I just will ignore it. If we break to the downside, again, this is going to be a lot easier for a trade to potentially happen because those supports are so much closer. So even if earnings only moves 8%, but it's to the downside, we've got a trade or potential trade. If we break 8% to the upside, it's not really doing all that much to us. That would take us into about statistical mean, which again, no trade opportunity. So if we get in an upside move, really I need to see about a 21% move. So again, to me, probably only going to be getting supports if the earnings are negative, or at least they get hit on the earnings. If it goes to the upside, unless we're getting a mega move, really unlikely that I'm going to be trading this. But those are the key levels that I'm paying attention to coming into the earnings. I hope you enjoyed the video. If you did, why not drop a like and subscribe? If you want some Lumley trading merch, that is in the description. And if you enjoyed the video, why not check out this analysis video.